JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 9th of September 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yep, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now, quick update on what's happening here globally in terms of the coronavirus. Now, as we can see, the figures are jumping up and down, up and down. However, if we apply technical analysis and all this, I mean, we can see that it's kind of moving in a range right now. So hopefully this range can be broken to the downside. So let's hope for that, but of course we'll continue monitoring the situation. Jumping into the charts here, of course the whole corona issue is also weighing in here on the markets, on the equity markets, due to delays in approving the coronavirus vaccine. So yep, this is all not coming well here for the market, and we can see here, for example, the German DAX, which I want to touch on here first, yesterday closed in the red. However, on the positive note, it still remained above this short-term upside support line taken from the low, the 15th of June. So basically not all is lost here still for the buyers. And if we take a look at the cash index, for example, where the price is currently sitting at, we can see that the price is around 12,950 zone. So basically not far from where it closed, and still above this upside support line. Now, if we want to be a little bit more on the cautious side and target higher levels, then yes, a push above the 13,314 zone would be required, just to be on the safe side, because that's the highest point of July, and last week we saw the index moving higher, but it kind of failed to remain above this area, so, and it declined back below it. So ideally a nice daily close here above this barrier could do the trick for more buyers. If this upside line gets broken and the price starts falling below the 12,754 zone here, marked by the low of last week, then yes, of course, this would confirm a forthcoming lower low, and lower levels could be met. Jumping into Nikkei, the index closed in the negative zone today. It opened with a gap here to the downside, although you can see that the bulls did try to recover somewhat. However, on the kind of slightly negative side is that the index remained and closed below its 21-day EMA, shown here as the yellow line. So all this is kind of hitting a few alarm bells, I would say, but of course on the slightly positive note, the fact that it still is balancing above this short-term downside resistance line taken from the high of the 10th of June, that of course is still kind of keeping the buyers probably active. Now, if this downside line gets broken and we see the price falling below this downside line, then well, this is where we could start looking at some lower areas, guys. with the upside, as I mentioned to you previously yesterday and recently as well, then still probably preferably a nice good daily close above the 23,339 zone here, somewhere around here, could do the trick for more buyers. Shanghai Composite also continues to drift lower, so it continues now. Today it's trading below this 3,307 zone. It talked about this area, and of course all this is kind of creating this slightly bearish atmosphere in the very near term, where the index might end up traveling towards this lower side of the potential range here near the 3,181 level. Now again, the reason why I'm saying potential, because we do have a bit of a gap here, so it's not really an ideal range here unless we see the index dropping lower, testing this area right here, and then rebounding back to the upside. And this is when we could, like I said, take it as a very nice range overall. For now, overall, if we look at the slightly bigger picture, we can see that yes, the trend is the index is still balancing above its upside trend line taken from the low the 19th of March. So in a way, there is still hope here for the buyers, but from the very near term perspective, there is a possibility we could see this one drifting a little bit further south. Jumping into DXY, another index, but this one is a dollar index, and we had a nice strong move above this 21-day EMA. This way DXY is kind of opening the door towards higher levels. Now, for now, basically, yes, we will aim for some higher areas. Initially, we'll target this 93.81 zone, which, as you can see, acted as a fantastic area of resistance recently here in the beginning of August, and previously it was seen as the lowest point of September of 2018. So again, for now, that's what we're going to be aiming here for. If that gets broken, then yes, this could lead to a bit of a larger correction to the upside here towards this downside resistance line taken from the high of the 23rd of March. Quick update on gold. Gold is stuck. Although yesterday it did drift lower here, but failed to move below this 1901 zone. This is the level that I keep talking about recently, and basically in order to get comfortable with lower areas, we need that nice good drop, strong move below this 1901 territory before, like I said, considering lower areas. In order to aim for the upside, at least a push back of the 1950 zone here could do the trick for more buyers, so keep your eyes on that one. Quick update on WTI oil. Now, yesterday in my trader's tea time, I talked about this commodity, and basically in the morning I was mentioning this one, saying that keep your eyes on this level right here, the 38.74 zone, because if that gets broken and we see the daily candle remaining below this area, then yes, further declines are possible. And as I mentioned in my trader's tea time yesterday, the next target here for us is around the 34.38 zone, or this 23.6% retracement on the Fibonacci. And basically both levels almost coincide. So yeah, we'll keep an eye on that one. We'll see how it performs around here, and if it continues to slide below it, then of course yes, it could be opening the door towards even lower areas. And of course, one of the areas to consider is the 38.2% retracement on the Fibonacci here. Slightly above that, we do have that 31.16 level, but also what you could keep an eye on is this, the high of the 6th of April here, or actually the highest point of April, near the 29.11, which is basically near this 38.2% retracement on the Fibonacci. So again, for now, let's keep it short and simple. For now, we're targeting the 23.6% retracement, and or the 34.38 zone right here, marked by the low of the 15th of June. Ripple. So Ripple is still struggling with moving lower, because as you can see, it keeps flirting with this 0.2357 territory marked by the highest point of April, which coincides with the 200-day EMA here on the daily chart. We need that nice good strong move below this area, ideally the daily candle remaining below this 200-day EMA, and then yep, we could consider a further correction to the downside. And the reason why I'm saying correction, because we're still trading above this upside support line taken from the low the 13th of March. So in a way, if we do get that drop here below this 0.2357 zone or this 200-day EMA, then something like this we could be keeping in mind here, and then yes, of course, we'll take it from there further. But if this upside line gets broken and we see the price falling somewhere below the 0.1886, 85 zone, then well, I mean, lower levels could be met. But one of the first levels to watch out for here probably could be this one right here, marked by the high of the 9th of July, and that's around the 0.2120 territory. So something for you guys to keep in mind. USDCAD. Now this one had a perfect move higher yesterday, and I talked a lot about this pair recently, and I was saying that keep your eyes on this this medium-term downside resistance line taken from the high of the 19th of March. And as you can see, that got broken yesterday. The daily candle continued to move higher here, and managed to stay above this downside line and very close to this barrier, the 1.3233 territory right here. Let me just quickly double check this. 1.3239. I do apologize, guys. There we go. So 1.3239. If you want, you can round it up towards the 1.3240 territory. So it ended up just fractionally above that area, and today, to be honest, we can see that the bulls probably are not willing to give up here, and are probably willing to drive this one further north. However, let's not forget that we still have another downside line here taken from the high of the 31st of March, which could provide a hold up here for this pair if that line will get tested eventually. For now, we're still going to remain somewhat positive because we had a nice break here of this downside line and a push above this 1.3240 territory. So let's see if this can continue, how far this can continue pushing higher. We'll aim for this 1.3314 level initially, but then we do have a bunch of obstacles here, like for example the let me just adjust one of those. So somewhere around here, the 1.3460 zone, which is near the 200-day EMA here, so which could in a way provide a bit of a hold up as well. So something to keep in mind for you guys. GBPCHF dropped to the downside strongly yesterday, and initially I was talking about this pair and I was saying that if this barrier here, the 1.2037 zone, continues to provide support, then we could see a nice rebound and a push higher. But that area got broken and this upside line got broken as well, and this is what I was talking about this week, guys, when I was covering this pair, that if this upside line gets broken and the rate continues to fall below this 1.1892 territory, then yep, we could consider some lower levels here, maybe up until this 1.1754 zone marked by the low of the 27th of July. So for now, guys, be very careful and keep your eyes on this one. In order to consider the upside again, we would like to see at least a push back above this 1.2037 zone, and then aim for slightly higher levels again. But for now, it seems that the upside could be off the table, so that's why we're examining these lower areas for now. Now, something that I looked at previously, but kind of kept it for a while away. I moved away from it, but it's still quite interesting, especially technically. So you can see, apart from, of course, the fundamental story of all this, but you can have a look at all the Turkish Lira problems in the news right now. But yeah, the country is struggling with very high inflation, and you can see here, for example, the Turkish lira is very devalued against the euro if comparing it to the beginning of the year, for example. But for now, as you can see, this barrier here, the high of the 18th of August, is kind of providing a bit of a resistance. Now, although we did get a few overshoots and we did basically create a new all-time high here, however, this August high is near the 8.8226 zone, is still kind of providing a resistance. So in a way, if it continues to do so, then maybe we could see this one reversing back down here. But if, of course, if this gets broken and we see the daily candle remaining above this, then, well, it increases the chances maybe of moving towards that psychological 9 level. But again, let's wait and see. For now, let's not over speculate on this too much. Of course, from the technical side, we do have ourselves a bit of a ascending triangle here. But let me just draw this, what I'm talking about here. So something like this right now. But if you, like I said, if you want to be a little bit more on the safe side, wait for that confirmation break either above this 8.8226 level again, or a break of this short-term upside support line, and then we could consider a bit of a correction to the downside. And finally, EURUSD. So this one is drifting nicely to the downside. Everything's working according to the plan. But now the big question here is if the dollar will continue strengthening. Yep, this here pair might start rolling over and start moving further south. But however, as I mentioned to you guys, or should I say, as I keep mentioning to you guys in every single video of mine, ideally a drop somewhere below this 1.1725 territory could do the trick for more sellers. So that's why for now, as long as it remains above this upside support line taken from the low of the 14th of May, the pair does have a chance to drift higher still. If you want to be a little bit more on the cautious side, wait for a push above this barrier right here, the 1.1815 level, and then you could aim for a further move north. But if this upside line gets broken and the rate starts falling below the 1.1725 zone, somewhere around here, then, well, I mean, this is where the downside could come back on the table. So guys, be very careful here, and for now, probably take a bit of a stand here away, and just continue observing the price action and wait for that confirmation break. So guys, I really hope you found it useful. Thank you very much for watching and listening. If I really appreciate your time joining in here. So if you want to catch my video later on, my Traders Tea Time, as always, 14:15 GMT time. For now, guys, I hope you have a wonderful trading day. Stay safe, and I'll see you later. Thank you very much, and bye-bye.